Well, let's turn our attention now over to the markets. This week we are catching up with market analyst Kyle Bumsted. Hey, Kyle, thanks for coming back to Market Journal.
Thank you, Bryce.
Seems like anytime we have you on here, there's a big winter storm impacting the region. Another one here today. As we open up our conversation today, Kyle, any thoughts you have on how these winter storms are impacting either the grain or livestock markets?
I think it might just be some short-term logistics right now as far as, how's it going to affect slaughter as far as, cattle, getting some cattle to market. Maybe it might affect a few feeder cattle sales out there, and it may delay a few shipments of grain here or there, interior, but I don't think I don't think this one here that we're sitting in now is going to be a big event as far as that goes.
Yeah, appreciate your thoughts on that. One of the viewers had chimed in wondering if we could ask you about that, so I appreciate it, Kyle. Let's jump into our conversation here. Let's begin on the grains. Of course, we'll spend a lot of time talking about cattle here in a second, but when we look at the grain markets, beginning on corn, we're stuck in a sideways pattern. Size up that market. What are you seeing?
Well, corn has just entered its winter slumber, and it seems like we're trading this May contract here from about that 660 to 690 mark, and that's the top end of the range of 690, and the low end's about 660. So that's kind of where we've been ping-ponging back and forth here the last 3-4 weeks, and that's all it is. But the big mover this week is going to be the option expiration here, which is on Friday, and then we have first notice day next week. So there's going to be some movement around there, and we'll see if we can get some of these spreads, how these spreads as far as the March versus May, how they react once we get into delivery. Is there still some commercial short out there, or there's some commercials that still need some coverage out there? That's going to be key here on both the corn and the soybean market. Soybeans, kind of the same thing here. We have had a little bit of weather headline out of South America. It was a frost scare coming out of the weekend here. Obviously, a 3-day weekend that can change markets, but that frost scare really didn't affect a big area, and the beans have been stuck here between 15 and 15.50 for a number of months. But looking out there, new crop beans, you've been kind of stuck from that 13.60 to 14.20 area, and we're just kind of range bound right now as we sit here today at the end of February.
Yeah, I like what you said there. We're playing ping pong with those prices. Do you have any thoughts on what could break that either to the upside or the downside for the grain complex right now, Kyle?
Well, I think I think that a shift in the weather pattern, which we're obviously seeing a little bit of a shift in the weather pattern, but until we get some new headline news, we're getting a few more headlines out of Russia and Ukraine again. I'm not sure that that's going to be a big mover as it was a year ago. We're coming up on the anniversary of that, and a lot of folks said it wasn't going to last long. Here we are a year later, and the longer it persists and the longer it drags out, the worse it could potentially get. So there's always that little bit of optimism. But looking at the southern plains there, we still need a lot of moisture there to get this wheat crop up and going too. And we are seeing a little bit of moisture in the forecast. Now, whether it comes into fruition, that'll be the next thing. How this wheat comes out of dormancy, that'll be another thing too that we need to watch.
All right, Kyle, let's talk cattle a little bit. You sized things up earlier today talking about the futures market for cattle, and you described it as watching paint dry. What do you mean?
Well, we didn't do a lot here middle of the week. We did make new contract highs, which is good. Bear markets don't make new contract highs. I've said that numerous times, and bear markets do not make new contract highs. So it is a bullish market. Now, the thing that's been driving this market has been the cash. Now, middle of the week, we were starting to hear some 162 trading in Nebraska regionals there, and there was also some 259, 260, 261 dressed, depending on the quality of the cattle. Now, by quality of the cattle, I mean, are they barn cattle? Are they outside cattle? Are they carrying a lot of tag? What kind of conditions are the cattle coming from, and what are they going to grade? And the southern plains were pretty optimistic. They were holding for 164 to 165, and I had heard some 162 to 163 middle of the week. So cash is going to have to be a driver here. The futures have made an impressive move here, and we do need to have this cash market keep pushing us up here, or in order to sustain these lofty levels and some of the premium out there in those deferred contracts, we are going to need cash market to really come through and keep working higher. And recently, we've seen a nice jump here in box beef, which has helped improve those packer margins, so they can afford to pay up a little bit more. And I think for the month of February, as we sit here towards the end of February here, we've jumped almost $20 on the choice in the select box. So that's definitely helping keep that underlying current. And we've also seen a small drop off in slaughter pace. Now, I don't know if that's actually lower numbers or if that's maybe tweaking the chain speed just a little bit here at the end of February.
Kyle, you said that the cash is driving the futures right now. What are the factors pushing cash prices higher as we speak?
Well, I think box beef has been the big one. There has been a little bit of weather too. These cattle aren't grading near as good, so I think they're having to really pay up to find good grading cattle, and it's kind of helping some of the poor grading cattle out as far as bringing that average up too. But definitely the box beef. The box beef has seen some really good demand. I'm really interested to see here at the end of the month how we close out with the cold storage report. Now we do have a cattle on feed report here at the end of the week, and I think going into it, there's going to be a little bit more optimism here as we get towards the end of the week and maybe first part of next week. It all depends. But when you look at how the spreads reacted, what the market actually told us during the month of January. Now this is up to January 31st that the cattle on feed report is going to cover. We did market a few more cattle based on spreads. So we did see the Feb April live cattle spread gain a little bit, and we also saw the April June gain a little bit, and the June versus August did gain some too. So what I'm looking at here as far as cattle on feed, not year over year placements and marketings and on feed and things like that. I'm looking at more month over month. Is the situation improving? It looks like it is improving. There are getting to be less numbers out there, and the market is telling us that as we see these spreads tighten up just a little bit. We're still in bearish territory, just not as bearish as we were here about 30, 40 days ago.
All right, Kyle, well, I'll give you the final word here, about a minute or so left. What do you want to leave us with? Some of your final thoughts on how you see the cattle markets right now.
How I see the cattle market, I guess I've seen a lot of closeouts that are $200 to $300, maybe $400 losers. So as we see these deferred contracts, we're buying feeders here, giving $1,400 to $1,800 a head, whether it's steers, heifers, whatever it is. If you're going to take them home and raise them, grow them, grass cattle, raise them to breed them as far as young heifers, I think you really need to look at that downside risk. We haven't seen any black swans here for about 2 years, 3 years, depends on how you want to classify how we come out of the pandemic or the fires that can sometimes happen out here at some of these processing plants. We haven't had a black swan in quite a while. So I urge people to take a look at their break evens. And if you think you're breaking even on them, you might be forgetting something. So figure in a little bit more, and you probably should be looking at some cheap downside protection at some point.
Watch out for the black swans, and wise words, Kyle. We appreciate your time.
Appreciate your time too, Bryce.